Hi and welcome to the Market Alert for Monday the 14th of September 2020. So US budget deficit soars to 3 trillion record. This was kindly sent to me by a good friend Sam, and very interesting article indeed, especially when you move down here where it said the federal government spent more than 6 trillion in the first 11 months of its financial year, including 2 trillion on coronavirus programs, the Treasury Department said. Well, they're right as far as the 6 trillion, but it's always reported as 2 trillion. And I covered this in a Market Alert before, and I was actually going to do a full video about this because Trump actually printed 6.2 trillion under the coronavirus stimulus bill. But the mainstream media only mention 2.2, and I'll just prove this to you actually. Let me just show you this. So here you can see that the US actually printed 2.2 for the coronavirus stimulus bill, but they actually printed 6.2 trillion, which I have covered in another video, and I'll see if I can find the link. I will add it to the video. So a lot of sleight of hand going on, and even from the White House archives, I downloaded the transcript, and it was 6.2 trillion. So for me, in March of last year, the banking system absolutely failed, and it isn't speculation. It did, and they needed 4 trillion of US dollars to put liquidity back into the system, which that's where they managed to do it without spooking anybody, any of the markets, or having individuals run out and get their money out of the bank. They were able to disguise it within this bill here, and like I say, it's all, the information's all freely available to see. Anyway, that aside, like I say, it's just interesting that the US have, or rather the BBC have actually printed this, which is unusual to say the least, and also we're coming out on the anniversary of September the 11th as well. But one hell of a mess. You'll see a lot more of this going forward with the potential second wave US election, and of course we've got Brexit in the UK as well, so the perfect storm over the next few months. But let's have a look at Friday's trades. Let's wind back to the start of the day. We can see before the market open, prices had managed to trade below the DP and the 200 MA. So let's fast forward to the open. Prices were sideways. As you can see, they're stuck in a range, trying to get back above the DP level, and then failing to do so convincingly. But then it managed to break to the upside, and you can see here that prices closed back above the 200 MA and the DP level, moving prices up to the next BRN, where if I just move back here, you will see that this bar here and the increase in volume prices struggling to move higher, and then make their way back towards the 20 bar BRN, and then have a potential sell signal, and of course not the best of places, because they'll want to get the market back above the DP and the 200 MA. So at this point here, I'm watching closely to see, I think I'll take the money, because we've got the support to the left as well, and the buying here. So take the profit off the table. The market does move a bit lower, as you'll see there, trading down to this low across here. You'll see that there. And then prices turn around and move back towards the 200 MA. You can see how it became a resistance area for a very long time, until eventually prices broke to the upside. And then again, as soon as I got the red bar, potential weakness coming in the up move, after the scalp took the money off the table. And then prices trading sideways, breaking the DP level, and then moving back down to where they started, which you can see there, which is a shame we didn't get another signal in this area. But like I say, these are new ones that I'm currently working on, where we can see how we can take advantage of these two levels coming together, the 200 MA and the DP. So in the afternoon, the market was sideways to low. Again, you can see that we'd broken both of these areas, and prices then sailed south So the market already short before the open. You can see the green bar there, bit of support coming into the market. We then get a potential buy. This doesn't last long at all. We've got the DP and the 200 MA above, but immediately the market ran out of steam and then started to reverse. 16-point loss on the first trade, but then the market being below the DP and the 200 MA and then taking out the BRN sail back down to the low here. But of course we've got buying in this area as well, and you can see the market finding support here now and taking the money off the table, recouping the loss on the first trade. And there's your green bar in the same area where the market had retested. Again, we had another potential buy signal. The market didn't quite get up to the first profit target. Again, the scalp. As soon as I saw the red bar, it was a case of jump ship, another small loss there, and then again short on this one, and again taking the profit off that to recoup the loss. So just a few points profit at this point. And then we had a potential buy signal and the market managing to get back through the DP level. And you'll see here taking the money off the table because once again the market was running out of steam and not really moving a lot. Traded up to the BRN, and then for the rest of the session prices did manage to come back down, find support, and then move to the upside. So once it had found its direction, it was fine, but it took a moment or two to do this on the afternoon. Overnight on the 2-minute chart, you can see prices are above the DP and the 200 MA. And again, we'll just compress this down. Let me just get rid of this, and let's just have a look where we are in the sort of bigger picture. So there's your DP, there's your center, and then we're at sort of above the high there. So the 200 MA is above the high at the moment, a long way from the low, over 100 points from the low. So let's see what we can gain from the daily chart. So let's just move this across. So we've got the selling from last week, we've got the buying coming in the following day, and the market's been in a sideways range there. So for me, it's a quick case of drawing in from this high to this low. We can see that we've gone through the 62 and we're stuck at the 78 on the upside at the moment. As we've seen from the printing of the 3 trillion over the last year from the US, it's the Fed really have got control of the stock market as well. I'd like to know what happened to the other 4 trillion. I know the Bank of England and a lot of the central banks received dollar liquidity, but I would like to know where the rest has gone. Has it actually made its way to the stock market, because they're still on the highs or heading towards the highs, which you can see also from the Dow. If you look at the weekly chart of the Dow, we're heading back to those all-time highs at the moment. It's completely inconsistent with printing 3 trillion and also universal basic income, UBI, where US citizens received $1,500 per person, less than $75,000 earnings per year through the initial part of the pandemic. So it's going to be very interesting to see how this market manages and continues to move to the upside. It has to have some external assistance. News-wise, today it's no news Monday. Tomorrow we've got the UK claimant count. Well, with the rest of the week, we've got FOMC. We had the non-farm last week. So, yeah, that's about the biggest news this week. Wednesday, FOMC. No change on rates there, but we'll leave the rest of the detail as we go through the week. But today, no news, so the market free to make its own direction there. Okay, that will do it for today. If there is anything else to report, I will let you know. Let's hope the volatility is a bit better this afternoon. Shouldn't be too bad this morning, as there's a bit of liveliness on the overnight markets. Prices above the highs at the moment. Okay, that's it. Thanks for watching. See you in the next one.